and this is Bloomberg West. Coming up, job cuts at Cisco. We dive into the latest earnings report and see how the legacy tech company is weathering the changing winds of the networking industry. Plus, he is the godfather of the internet. We'll talk to Vint Cerf about who should regulate the web and why Republican lawmakers are putting up a fight. And Tencent posts another blockbuster quarter. We will take a look at whether China's content king is poised to blow Baidu out of the water. First to our lead. Cisco shares dipping in after hours on news it will cut 5,500 jobs. That's about 7% of the workforce. The move underscores the company's struggle to adapt as the networking industry shifts towards software-based systems and undercuts sales growth. Cisco says it plans to put the cost savings into businesses like security, data center, the cloud. Meantime, the company's fourth quarter profits did beat estimates at 63 cents a share. Joining me now to break down the numbers, our Bloomberg editor-at-large, Corey Johnson, and on the phone with us, Brian White of Drexel Hamilton. Corey, I will start with you. You know, Cisco has had a lot of job cuts over the years. What do you make of these additional numbers? I mean,
I don't think it's unimportant. To anyone who's losing their job, it's certainly one of the worst things anyone can ever go through. But in terms of what this means for Cisco's business, Cisco has cut a couple thousand workers every one of the last 3 years. The number of people working at Cisco has gone up. So I think this is kind of the way Cisco is doing things right now, is sort of regular kind of bloodletting here, which is horrible for the people involved. But I don't think it points to any fundamental problems with the business. I think it's more about sort of focusing the business in the places where they want to be focused and not in places where they've been in the past.
Brian, would you agree with that? I mean, Cisco is also a company that's historically made a lot of acquisitions. I mean, how should we make sense of this?
No, I think Corey's exactly right. Cisco has to evolve with the times. Obviously, more business is shifting into the cloud. Software is becoming more important, and they're making a big push into security. So if you have workers that are focused on legacy products, there's not really that much work for them. Look at their switching business, their routing businesses. They're either declining or slightly growing, and there's really not much growth there anymore. So these newer areas are where they're investing in. Security, I would highlight, and they just got into analytics with Tetration a couple months ago. So those are examples.
So, Corey, when you're looking at legacy product growth, how fast are sales of their legacy products, switches and routers, actually stalling?
So, well, they're not. So overall, the revenue numbers are down 2%. But then if you take out their video business, which they got rid of a year ago, the sales were up 2%. So all of their existing product lines, on average, were up 2%. But if you break that down further, if you look at their business switches, the switching business was up 3% revenue-wise year over year. Their security business, which Brian was just mentioning, up 16%. Now, it's only 4% of revenues, but it was up 16% on a year-over-year basis. So the terrific growth in security, very strong, fine growth for a hardware maker in the switching business. It's worth also thinking about in this time in which the cutting-edge technology in switches is a software-defined network. So it is using one switch or one router and basically using software to cut that up to do the job of many routers. Well, that fundamentally is going to mean you're going to sell fewer routers and fewer switches. So in an era when software-defined networks are letting you get more out of individual switches and routers, I think that these numbers really aren't that bad.
So this is a company that's also gone through a big leadership change over the last year. I sat down with Chuck Robbins, the new CEO, a few weeks ago, who took over for John Chambers after a very long tenure leading Cisco. He, of course, is still the executive chairman. There's been a lot of management turnover at the top of Cisco. We've seen some of Chambers' top lieutenants leave. And I asked Chuck Robbins, why is that happening? Take a listen to what he had to say.
We had to move forward, and the thing that we don't write articles about are all the people who are still here. Right? But John developed, and the whole leadership team built a tremendous bench. And we went through this discussion when I first took the job. There are many of those individuals, and what I asked for was, hey, can you commit to 3 years? And several of them had aspirations to be CEOs and have subsequently become CEOs, which I'm very happy about, and we still stay in touch. But the bench that was created allowed us to build this next generation leadership team that I believe has put us in a position to really execute more effectively in the future.
Brian, how would you rate the job that Chuck Robbins is doing so far in terms of filling John Chambers' sort of legendary shoes?
I think he's done a great job. I mean, tough shoes to fill, but he's an operations master, if you look at their operating margins this quarter at 31.4%, it was the highest since the second quarter of fiscal '06. And that's what Chuck Robbins is known for. So great margin numbers this quarter.
Those are great margin numbers. And you know, in 5 of the last 7 quarters, gross margins for this largely hardware-making company are up around 65%. Gross margins this quarter were up. In fact, in 5 of the last 7 quarters, gross margins have risen on a year-over-year basis. So I think that shows some operational strength here and the benefit that these layoffs have provided for Cisco.
Over the longer term, Brian, do you think that these new services, these new businesses that they're investing in will actually be able to pick up the slack?
Definitely. If you look at, recurring revenue made up 28% of sales in the quarter, and that's up from 25% a year ago. And if you look at deferred revenue and software and subscriptions, was up 33% year over year. So these are higher margin areas. They're growing faster. That means margins should go up over time, for sure.
You know, Corey, Cisco for so long was a bellwether of the technology industry. It sort of lost that, like, iconic status. But what do you see as the place for Cisco in the broader picture now?
So,
why is Cisco still important?
Well, Cisco's hardware is less important. Enterprise hardware is less important in an era of the cloud when every company doesn't have to rebuild an entire technological infrastructure in the back room or in the data center, right? They're using Amazon Web Services, they're using Microsoft Azure, they're using rack space. And yet, when you look at what Cisco's been able to do, Cisco has remained relevant when its competitors have not. Cisco's seen sales go up 4% over the last calendar year, when Hewlett-Packard, Dell, IBM, all those hardware slingers are falling apart, where revenues are massively in decline. So I think it's worth noting that Cisco selling hardware, in addition to software and security, selling hardware is succeeding where its competitors are not.
And look, Brian, we don't like to harp on the stock price on this show, but, 99-2000 is when Cisco really peaked, and the shares haven't moved much in the last decade and a half.
As any Cisco employee will tell you.
Right. Do you expect that changing anytime soon?
I think the stock can be re-rated here. You're seeing it outperform the S&P year to date. It's up 13%. They've got this great dividend yield, 3.4%. Now people can look at margins and say, wow, margins actually are going higher, not lower, which is something that's very strange for what people view as a hardware-based company, but I think it's becoming more and more software. So I look at a good example is this. At 10 times X cash, this company has grown EPS 7% a year over the past 5 years. Now, if you look at some of these sugar, water, and detergent companies, Coca-Cola, Pepsi, Clorox, put them in a bucket here. We got 4 of them. They've grown EPS 2% a year for the past 5 years, so annual CAGR, and they trade at 22 times earnings. I think Cisco is becoming so important to the IT world and has a great dividend now, people are going to give it a better multiple.
Break exclusive. Not only is Chuck going to be on Bloomberg Go tomorrow morning, he's going to come on Bloomberg Radio with Carol Massar and I on the Bloomberg Evangelist tomorrow in the 10 o'clock West Coast, 7 o'clock West Coast hour, 10 o'clock East Coast hour.
I'll make sure to listen to that. Thanks so much. Corey Johnson, our editor-at-large, Brian White of Drexel Hamilton. Do not miss Chuck Robbins on Bloomberg Go tomorrow and Bloomberg Radio with Corey Johnson. Now, to a question we keep asking, is Uber actually worth its monster valuation? One expert says no. NYU Business School professor Aswath Damodaran specializes in equity valuations. He crunched the numbers and says the ride-hailing giant should be valued at south of $30 billion, less than half of the $62.5 billion valuation it currently has. The main reason, he says, is profit. In a blog post, he writes, disruption is easy, but making money off disruption is difficult. While the ride-sharing option is here to stay and will continue to grow, ride-sharing companies still haven't figured out a way to convert ride-sharing revenues into profits. He went on to say that the Didi deal is hurting Uber's future revenue potential in China and said that other big public market players could still jump in as challengers to the company. As it stands, Uber's valuation is higher than 80% of the companies in the S&P 500, higher than existing auto industry heavyweights GM and Ford. Coming up, a long-simmering but highly controversial question: whose job should it be to govern the internet? We'll discuss with one of the web's founding fathers next. This is Bloomberg. controls the internet? It sounds like a rhetorical question, but until now, that job has largely belonged to the U.S. government, specifically the Commerce Department. But this week, the Obama administration formalized a long-planned move that will shift authority to a nonprofit, multinational stakeholder entity called ICANN on October 1st. Facebook, Amazon, and Microsoft are among the big tech companies supporting the transfer, but several Republican lawmakers are putting up a fight. I sat down with the so-called godfather of the internet, Vint Cerf, Google's chief internet evangelist and the former chairman of ICANN, and asked him to explain why this transfer of power is so important.
Well, in fact, it was planned to do this. In 1998, when ICANN was created to perform this function, the plan was to turn over all the responsibility for those functions to ICANN without further government oversight within 2 or 3 years. It's now 18 years later. The organization has performed well. The internet has not collapsed. Its functions have taken care of the domain name system, the internet address allocation, the parameters of the internet protocols. It's time to show that the internet doesn't require government oversight. What it requires is operation by the private sector together with all of the other entities. That's why multi-stakeholder operation is important.
That said, opponents say this could hurt U.S. businesses, this could put national security at risk. Could this hurt U.S. businesses? Could this hurt Google?
I don't think so. If anything, this is the right thing to do. Under the current circumstances, where the government has this very small but very visible oversight role, other governments look at that and ask, why should the U.S. government have this special position? It isn't necessary anymore, not after 18 years. ICANN has formed and reformed itself in its operation multiple times, especially during the course of my chairmanship. And at this stage of the game, it's more harmful to persist in this special relationship than it is to show that a multi-stakeholder system, including all the governments, not just the United States, is the way forward.
What harm could there be if the U.S. government does continue to oversee it as is?
It has a very severe impact because other governments that feel that the U.S. shouldn't have this particularly special position are going to work very hard to fragment the internet, to insist that they control more of it than they do today. The governments today have a lot of control over what goes on in the internet inside of their national jurisdictions. What they don't have is control over what happens to everybody else's pieces of the internet. If the U.S. government persists in this special position, the other governments will feel the need to increase their control one way or another. And so I think by stepping away from this, finally, we actually remove a lot of that pressure and make it much more egalitarian.
Now, assuming this does happen as planned, what will be different? Will individual users even notice a difference?
Absolutely not. In fact, the current role that the U.S. government has, specifically the National Telecommunications Information Agency, is to verify that the changes to the root zone of the domain name system have been properly catered for in the processes that lead up to those changes. A router needs to be pointed to a different IP address, or domain name needs to resolve to something else. The U.S. government's role was merely to check that ICANN has performed its functions correctly and with due diligence. That's all. And so when they step away from that particular function, all the mechanics are exactly the same, except we won't go through this loop up to NTIA. Otherwise, it's exactly the same.
Now, as one of the fathers of the internet, I know that's what you are considered to be, how do you think oversight of the internet has played out over the last couple of decades, and how do you expect it to play out over the next 2 decades?
Well, I will say that for those who are watching and listening, that the U.S. government was the origin of this project. It started in the Defense Department. And I am very proud not only of the Defense Department, but other parts of the U.S. government, including the National Science Foundation and now NTIA, for persistently stepping away from control over this system and turning it over to a multi-stakeholder operation. When Bob Kahn and I were in the Defense Department at the Defense Advanced Research Projects Agency, we basically made the primary decisions and policy on what happened to the Internet. That expanded to multiple parts of the U.S. government, including NASA and NSF and DARPA, as well as the Department of Energy. And step by step, the government has withdrawn from its control oversight, and this is the last step.
And you used to run ICANN, which is in charge of domain names. You know, there's been talk that the Internet has become too big. Is it possible for the Internet to become too big, to run out of IP addresses, to run out of domain names?
No, well, we certainly won't run out of domain names. ICANN has authorized the creation of some 2,000 new top-level domains, in addition to the 7 that we started with way back in the mid-1980s. In terms of Internet address space, actually, you're quite right.
That was Vint Cerf, Vice President at Google and former ICANN chairman. Coming up, the athletes are the winners at the Rio Olympics, but a Silicon Valley super unicorn is trying to win big as well. We'll hear Airbnb's strategy for the games next. This is Bloomberg. Are online travel agencies spending enough to stay alive? Maybe, but not in the right way. Data from Focusrite research shows that customers make more and more bookings on smartphones and tablets, but companies like Expedia, Priceline, and TripAdvisor overwhelmingly target their ads towards PCs. One region where that trend is shifting is China. Focusrite is forecasting that by 2017, as much as 60% of bookings will be made using a mobile device. Accommodating mobile bookings may require more R&D and advertising spend from online travel companies, something that could put short-term pressure on margins at firms like Priceline and Expedia, which already spend about 15% of their revenue on ads. One startup is on track for gold in Rio. Airbnb is investing heavily in Brazil, working directly with the Olympic Organizing Committee and local groups to encourage residents of Rio to open their homes to visitors. So far, it's paying off, with over 81,000 guest arrivals, more than the 66,000 guests originally expected by Airbnb. I sat down for an exclusive interview with Leo Tristão, the manager of Airbnb Brazil, and began by asking about the company's economic impact on Rio.
this is one of the best stories we're creating for the Games. It's the economic impact that we are generating for the city of Rio. As a matter of fact, 1.5 weeks into the Games, the confirmed guest arrivals have increased from 66,000 to 81,000, and that's a great news for everyone because that means also it's a high economic impact for the city of Rio.
So the numbers are even better than you expected. Is that what you're saying?
So the numbers are very, very positive, and more important is how we are helping not only the Rio 16 committee, but also to attract the tourists to the city of Rio. You can see already for the 81,000 guest arrivals that it's really a very, very interesting and massive number of people having a great local experience here with the local community in Rio.
Airbnb is actually the official alternative accommodations provider for the Olympics. You know, by contrast, in London, you had some people renting out their properties and facing fines because of it. How early did you start talking with the IOC and Brazil about making this happen?
So I think the partnership with the Rio 16, it's a consequence of a very important chapter that we had back in 2014 during the World Cup. I think the community here in Brazil, specifically to Rio, received guests from all over the world in a very, very positive way. And you know, Airbnb, it's a great solution for cities who wants to really increase their capacity for large events like the Olympics. So the conversation happened naturally, and in 2015 we signed the partnership to ensure that everyone wanted to come to Rio for the Games have a place to stay.
You were up against a couple of other local accommodations providers, and there's no actual history of there being an official alternative, an official accommodations alternative. So what did it take to close that deal with Brazil?
You know, I think, you know, the city of Rio is it's a city that presented already an opportunity for the alternative accommodation because there are so many people already interested to come to the Games, and with the traditional capacity, you wouldn't be able to have those people here staying for the Games. So that's when we signed the partnership with the Rio 16, again, to ensure that everyone wanting to come to the Rio 16 to participate to the game had a place to stay. And I think, you know, 1 year later, here we are with the very, very positive numbers and making history because, again, I think one of the key legacies that we're having for Rio 16 is for the first time we are bringing a sharing economy to the Olympics.
That was Leo Tristão, manager of Airbnb Brazil. Staying with the sharing economy, Uber is suing London's transport regulator over rules it says may hurt its business. Specifically, it's fighting rules requiring drivers from non-English speaking countries to pass an English language exam. The rules also force Uber to notify Transport for London of any changes made to its mobile phone app. Previously, Uber won a suit against the regulator over the use of its app as a taxi meter. The company is also still waiting for a ruling in an employment dispute with drivers. Coming up, he helped build Dropbox from the inside. Now he's on the other side as a venture investor. Ilya Fushman of Index Ventures joins us next. And if you like Bloomberg News, check us out on the radio. You can now listen on the Bloomberg Radio app, Bloomberg.com, and in the U.S. on SiriusXM.
I'm Mark Crumpton. You're watching Bloomberg West. Let's begin with a check of your first word news. President Obama's been briefed by FEMA on developments in Louisiana, where flood relief efforts continue. The president ordered the agency to, quote, utilize all resources available to assist in the response and recovery. Meantime, the Red Cross says more than 1,000 disaster volunteers have been mobilized. The cost of the operations expected to exceed $30 million. Some 40,000 homes have been damaged. At least 11 people have died. The latest Quinnipiac swing state poll shows Hillary Clinton with double-digit leads over Donald Trump in Colorado and Virginia. The same survey also gives Clinton a 3-point advantage in Iowa. South Korea's unification ministry confirms the second highest ranking official at the North Korean embassy in London has defected. The man arrived in Seoul with his family. He says he'd become disillusioned with the Kim Jong-un regime. Japan's developing a new missile military experts say will force a reset of Chinese military strategy around the disputed East China Sea islands. That's according to the Financial Times, which reports the surface-to-ship missile is designed to, quote, complicate enemy planning and would have the longest range of any built by Japan. Global news 24 hours a day, powered by over 2,600 journalists and analysts in more than 120 countries. I'm Mark Crumpton. This is Bloomberg. It's just after 6:30 p.m. Wednesday in New York, 8:30 Thursday morning in Sydney. I'm joined by my colleague Paul Allen with a look at the markets. Paul, good morning.
Good morning, Mark. We're 30 minutes into Thursday trading over in New Zealand, and the NZX currently up a little, about 0.2%, but things are expected to be flat on the Nikkei and the ASX later today. We're expecting a lot of earnings out of Australia today, including AMP. They're already out. Underlying profit down 10% to $500 million there. The ASX, Origin Energy and Treasury Wine also among those reporting. Shares in Tencent are going to be closely watched in Hong Kong today. That's after they announced a record profit, a 47% climb in profit. That's after the $8.6 billion acquisition of Supercell as well. Shares in Tencent up 27% so far this year. A lot of data out today as well. We have Australian unemployment for July. That's expected to hold steady at 5.8%. Japan's July trade balance is expected to have pulled back a little to $1.8 billion on weaker auto and steel exports. And we also have China house prices for the month of July out as well. I'm Paul Allen for Bloomberg TV in Sydney, Australia.
This is Bloomberg West. I'm Emily Chang. Crossing over from building a startup to investing in them, that is the journey of one venture investor joining me now. Ilya Fushman joined Dropbox early on. He became head of product through a phase of spectacular growth, and now he's a partner at Index Ventures, a venture capital firm that's backed a range of international startup success stories, from Facebook and Supercell to SoundCloud, Squarespace, Etsy, and SwiftKey. And you led the investment in Slack, as I understand it. Ilya, thank you so much for joining us. Great to have you back here on the show.
Thanks for having me.
So first of all, it's been a year now at Index. What has the transition been like, and how has your experience in such an intense phase of growth at Dropbox impacted your style of investing?
It's been a lot of fun. So it's been an incredible year. I've had the opportunity to invest in Slack, companies like CultureAmp, Optimizely, Intercom. Made about 10 investments so far, which has been really, really rewarding for me across the board from early to late stage. The biggest things, that I think about are twofold. One is, as an investor, the most important thing is identifying great opportunities. And I think having been at Dropbox, having seen the problems that companies like Dropbox face in operating themselves, being in a network of great entrepreneurs on a peer level where you're advising, you're meeting, you're kind of working together through problems, exposed me to a lot of interesting people, right? So in the case of Slack, I'd met Stuart and Cal when they were just starting out. We'd become customers of Slack, we'd use the product, I'd seen the potential. In the case of Intercom, one of the things that was very interesting to me was that the way in which companies communicate with their customers is fundamentally very difficult and broken because of the infrastructure that's in place today. And so that was a clear opportunity that I thought is a must invest for me. With CultureAmp, which is a company that helps organizations engage with their employees, we'd been users of the product. So I'd seen all these things, and I'd sort of known that these are the companies I'd want to be an investor in when I come out of Dropbox.
Right. It's interesting because we were talking about Cisco at the top of the show. They reported earnings today. They're such a legacy enterprise player, and I think with enterprise companies, there's always this struggle between, giving customers what they should want and what they think they want. And so when it comes to a company like Slack, based on your experience at Dropbox, sort of how are you advising them to make sure that they are giving customers what they don't know they want yet, right?
Well, so Dropbox, I had the opportunity to go from 50 to 1,500 people, and pretty much every metric we tracked grew by 10 to 20x in that time. And so rather than being prescriptive and saying, look, we did things this way and you should do them that way, I think the right thing for me to do as an investor with operating experience is to help people do a few things. One is it's look around corners, right? It's say, hey, when we went from 50 to 150 to 500 to 1,000 people, these are the problems we encountered, and these are the frameworks that we use to think about things. So, for example, every 6 months, you should really evaluate your organizational structure because you're going to be growing really crazy. By the way, when you move from all being in one room to now all being in different rooms and in different offices, you really have to invest in communication because employees have to understand the mission and values of the company. And so it's these things that you sort of see on this journey that you can then transfer. And I think as investors, that's really our fundamental role. Companies that are successful, they're growing as fast as Slack, they need to take decades of knowledge and compress them into years or months. And so by seeing things ourselves and seeing what other companies in our portfolio do and transferring that knowledge effectively is how we help.
Sources have told Bloomberg that Dropbox is exploring an IPO for 2017. Does that make sense to you?
Well, as a shareholder, I'd obviously be excited. I don't know what the exact plans for the company are. What I can say is that I think you've seen, Drew has been on the show, you've seen that the company has made incredible progress, both in terms of cutting costs and moving off Amazon Web Services on the infrastructure side. The business is growing quite nicely. I think it's over 200,000 paying business customers today. So I think in terms of revenue growth, in terms of profitability, we just reported being cash flow positive.
Right.
All the metrics are there, and I think they're on a great tear. So it's up to them to decide when to do it, but certainly the external markets, and as we've seen in the case of Twilio, I think are quite positive today.
That said, there's concern that the file sync and share market just isn't as big as people thought it was, and that Dropbox needs to increase their addressable market. What do you think they need to do?
I think in general, as companies grow big and they become more successful, they have a lot of opportunity. So, back to kind of the story of Slack, what you were asking me is, how do we help? One of these things is really understanding what you should focus on at any given time. And I think if you look at the history of technology, you look at companies like Microsoft that have become these giants with full product suites, they haven't done it at once. They've done it over time. And I think Dropbox is an incredible opportunity to go into business, to take a huge market share in enterprise infrastructure and storage, because they're one of the companies that really has the technical know-how of how to do that, and then use that as an opportunity to move more into productivity. So they just launched a product called Paper, which I think is phenomenal for team productivity and collaboration. And I think they'll see more and more opportunities like that on top of a foundational business that's generating a lot of cash and is highly sticky.
We're going through a dry spell in IPOs, and the trend for technology companies has really been to stay private as long as possible. You mentioned it would be nice as a shareholder to see an exit. What kinds of things are you telling your portfolio companies right now about, being IPO ready? Mark Andreessen was also on the show recently saying we're coaching all of our companies to be IPO ready. Is there more pressure today than there was, let's say, a year ago to, have an exit?
I think that really what companies, and I think this has been driven a lot by market conditions, are coming around to is being continuously ready, not just from a IPO readiness in terms of kind of, hey, we're going to go public tomorrow perspective, but really from a fundamentals of the business perspective. So I think folks are becoming a lot more thoughtful about profitability, about growing headcount, about thinking about how what to focus on as a business, and we're definitely encouraging our companies to continuously do that. I think that's just generally good hygiene. As you grow, I think you want to maintain profitability. You think you want to be in a position of strength, and I think you want to be thoughtful about how you scale things, especially on the cost side.
Another, interesting trend is that the secondary market which would enable sort of earlier employees to cash out or see some sort of return on their time investment in the company, the secondary markets have really shut down, and now you're seeing some companies experimenting with ways to give shares to employees before they, either have there's some sort of an acquisition or an IPO. What's your philosophy around that? Like, what should companies be doing?
So look, I think talent and people are the lifeblood of companies, right? That's what makes companies successful at every stage. And so I think doing right by your employees and making sure your employees are engaged and bought into the mission and vision of the company is the most important thing. The financial reward of that is a big component, but I think a big component is also just understanding and growth, personal development, and an overall kind of well-being. So I think what we encourage our companies to do is focus on both of those. I think liquidity is good for early employees. I think you want to be thoughtful about how you do it. You don't want to kind of overdo it. You want to make sure that later employees feel good as well about things. But certainly, if you can help somebody pay down the mortgage on their house, and if there is a good opportunity to do it in a controlled way, meaning the company has a structured program around it, I think that's a positive thing. But I think it's not just about the financial upside. It's also about personal growth and development.
All right. Ilya Fushman, partner at Index Ventures, thank you so much for joining us. Great to have you.
Thanks for having me.
All right, tomorrow on Bloomberg, do not miss a conversation on the future of the euro with Columbia University professor and Nobel Prize-winning economist Joseph Stiglitz. That's 6 a.m. New York time. And don't forget to tune in this weekend. We will bring you all our best interviews from the week this Saturday. Catch our conversation with one of Europe's most well-known tech investors, Nicolas Sennström, the best of Bloomberg West this weekend on Bloomberg Television. This is Bloomberg. Now to a story we've been following. Women may make up half the population, but they hold just 12% of engineering roles in the United States. Goldilocks is a company aiming to change that for future generations by creating toys intended to get girls into coding. The company has sold over 1 million of its toys since 2012 and recently launched a mobile app. I sat down with Goldilocks founder and CEO Debbie Sterling and asked her about the mission.
We're exposing girls and boys, for that matter, to these basic skills. So all of the simple machines that make up our world around us. In the physical toys, we have things like wheels and axles and pulleys and joints, and these are the parts that make up the whole world. Like, this desk is built out of them. And then in the app, we're teaching basic visual commands and how to sequence and debug. And so, kids start kind of tinkering and playing with it, and we're making it fun. It's like we're sneaking the broccoli and the mac and cheese. So they don't realize that they're learning, but little by little, what we've noticed with kids when they play with Goldie Blocks is they start to see their world in a different way. We have kids saying, like, Mom, don't throw away that tape dispenser. I can use that as a part for my latest invention. Like, that's the amazing thing.
So the coding app, girls as young as 4 can use this app to start to learn how to code. There are a lot of apps like this now, though. A lot of coding apps, ways to get your kids to learn how to do this. What's your main differentiating factor?
So my team downloaded and played with literally every single coding app on the entire market. And our game designer, who is a female iconic game designer, Jenna Chalmers, who's incredible, who I asked her, what can we do that's unique? What is going to really resonate? And the insight that we had is that storytelling matters. Girls love stories and engaging with characters. And a lot of the coding apps on the market today are open sandbox, so you can code, but what's the why? Why am I coding? What's the point? And girls often ask that. In our app, it tells a story of Goldie and her friend Ruby, who need to solve problems in Bloxtown and actually deliver cupcakes to figure out whose birthday it is. It sounds really simple, but it's this simple premise where girls, they want to get engaged because they have to solve this problem.
Now, on that note, the characters are girly. The colors are pinks and purples and pastels. In some ways, do you worry about reinforcing some of these girl stereotypes?
We've actually worked really hard for these characters to break all the stereotypes that you hear over and over again. Goldie is not a princess. She's an engineer, and she fails again and again. She's not a genius, but she's got her overalls and her tool belt. She's more like a Punky Brewster, quirky Pippi Longstocking, and boys think she's cool too. Like, they want to be her friend. And so we look for every opportunity to kind of put a twist on things, and one of the characters in the universe is actually a boy, Lee Zhang. He's Goldie's next door neighbor, and he appears in the app as well. So, we're really being inclusive. It's not girls only. It's for everybody.
So, do you plan to make toys for boys, or do you plan to make toys for all children?
Well, it's funny, actually. Just earlier this year, we launched our first toy that features Lee, who's one of our main boy characters, and we keep hearing over and over again that boys love playing with Goldie Blocks. So we're excited about that. We don't want to say girls rule, boys rule. We want everybody to play. And I'm actually pregnant and due with a son in October. And
Congratulations.
And how great would it be for him to grow up thinking Goldie Blocks is cool and that girls should be engineers too.
Now, you guys have made some viral videos. You had an amazing Super Bowl commercial. You won a Super Bowl commercial competition, and Intuit paid for this commercial. And you guys are part of a movement in the broader toy industry, disrupting the pink aisle, the blue aisle. Target has gotten rid of girls and boys toy aisles. Toys R Us has done the same. Amazon has done the same. What more does the industry need to do?
Well, we've come a long way since Goldie Blocks launched in 2014, and it was like the pink aisle is for girls and the blue aisle was for boys. And when I first launched, I almost got laughed out of the toy fair because everybody in the toy industry thought that girls wouldn't like building, that girls only wanted to be princesses. And so, the fact that this concept of Goldie Blocks went so viral so quickly really kind of proved to the industry, hey, girls and boys are kind of changing, and it's not the same 1950s stereotypes that people don't want that anymore. And so a lot has happened, like you said, and there's still a lot of work to do.
That was Goldie Blocks CEO Debbie Sterling. One stock we are watching, check out shares of Sharp, up 58% in the last week. The rally has been fueled in part by news that the stock will be added to MSCI indexes. That matters because those gauges are often used by funds and big institutional investors. Another reason for the jump, Foxconn's plan to take over the electronics maker was just finalized last week, even though the deal was agreed back in April. Despite the recent recovery, Sharp shares are still at less than half their 2014 high. Coming up, Tencent's big bet on content acquisitions. Did it pay off for the social networking company? We'll head to Tokyo to break down the latest report for one of Asia's biggest internet giants next. This is Bloomberg. SoftBank founder Masayoshi Son is still holding out hope for a Sprint T-Mobile tie-up. According to people close to Son, the billionaire telecom magnate would still like the two to merge. Remember, SoftBank already owns more than 80% of Sprint, and in 2014 he had considered buying T-Mobile as well. He abandoned the idea after regulators signaled they may not be in favor. But for now, Son may see a new opening. The FCC has yet to appoint a new head, and people close to Son say that he might try again. We'll pick up this theme tomorrow when we hear from T-Mobile CEO John Legere. Tencent's premium content shopping spree, from Game of Thrones to NBA broadcasts, has once again helped the company defy the effects of a slowing Chinese economy. Second quarter sales and profit beat estimates as user numbers surged and online ad revenue swelled 60%. Tencent has now topped earnings estimates in 5 of the last 6 quarters. Joining me from Tokyo to break it all down, our Bloomberg News Asia tech editor, Peter Elstrom. And Peter, we saw this with Alibaba as well last week. Is the takeaway here that the Chinese economy is better than everyone thinks it is?
Well, I'm not sure that the overall economy is better than people think it is, but now you've seen the 2 biggest internet companies in China both beat expectations pretty handily. And I think what you're seeing is that these 2 companies have figured out how to bring in the Chinese consumer and how to get them to spend on certain kinds of things. They're very different models, of course. Amazon is primarily an e-commerce company. I think it's simpler for people to understand. Tencent is much more complicated, but they showed that they also are doing quite well. They've done very well with the premium content. As you mentioned, they've invested in Game of Thrones and bringing NBA games into China in particular. They saw big increases in their audience for those shows. And then in addition to that, they just bought control of Supercell, the maker of Clash of Clans, and they've been able to do very well in their games business too. So those 2 businesses are doing very well. It's led to a big increase in advertising revenue, and overall they were able to beat pretty handily this quarter.
So based on all of that, where do you think Tencent's spending will go from here? Do you think they'll start to pull back at all or continue to ramp it up?
No, I think they've laid out a pretty aggressive plan for expansion. They have a very effective way to reach consumers in China through their instant messaging services, WeChat and QQ in particular. I think these are not that well understood outside of the country. It's described as messaging services, but WeChat is much more than that. It's a social networking service. It's a payment platform. It lets you do all sorts of things. So when Tencent wants to market new shows or they want to market new games, they have a great platform to reach more than 1 billion people in China, and they've been able to use that and really capitalize on it now to drive this consumer business.
You know, we've talked so much about U.S. companies trying to expand in China, U.S. technology companies, and, you know, the door being shut, essentially. And the same seems to have happened for Chinese technology companies, whereby, you know, Tencent, Alibaba, Baidu haven't had much success, at least expanding in the United States, even though Alibaba still says they want 50% of revenue to come from international. Ultimately, do you think we're seeing a sort of changing of the tides where that's not necessarily going to be their ambition in the future, and they really will be focused on the market that is China?
Well, there is a bifurcation, certainly, between inside of China and outside of China for many different reasons. I think Alibaba has been more aggressive about trying to expand outside of China. As you say, they're determined to get more than 50% of their revenue outside of China, even though they're very far away from that now. They bought an e-commerce company in Southeast Asia that should help them expand at least within that region. I think for Tencent, they're primarily focused on China, and they've been able to do very well. They have lots of growth in that market. But they did make this acquisition of Supercell, which I think signals that they do have global ambitions too. They need to figure out how to capitalize on those opportunities. They're making lots of investments in small startups, so they may be able to do that in the future. But they're still primarily focused on that Chinese consumer, which this quarter we saw is willing to spend if you put the right content, the right games in front of them.
All right, Peter Elstrom, Bloomberg News, our Asia Tech editor, joining us from Tokyo. Peter, thank you so much for that update. Before we go, a story that is trending. Apple is funding a documentary with Cash Money Records, one of the world's most successful hip-hop labels, home to artists like Lil Wayne, Nicki Minaj, Drake. Apple has wanted to expand its TV content, recently signing a reality show about app developers and a spin-off of James Corden's popular Carpool Karaoke. We will bring you more details as we have them. And that does it for this edition of the Best of Bloomberg West. Bloomberg West. It's always the best. Tomorrow, do not miss our weekly special on venture capital trends, Series A. This time focused on the business of entertainment with Bill McGlashan of TPG and Bob Simons of the studio STX. That is all for now from San Francisco. This is Bloomberg.
studios in New York City, this is Charlie Rose.
We continue this evening our coverage of the 2016 political campaign. Hillary Clinton was in Philadelphia for a voter registration drive, and Donald Trump was at a rally in Wisconsin. We want to talk about the Trump campaign and the Clinton campaign. Joining me from Washington is Al Hunt of Bloomberg View. Also joining us later, Katie Tur of NBC News. She has been with the Trump campaign since almost the beginning. Albert, welcome to the broadcast. It's good to hear from you again, my friend.
Good to be with you, Charles.
I have not had a chance to talk to you since you were in Pennsylvania. Give me a sense of what you found and when you talk to a lot of people across that state, a state that is crucial to Donald Trump, and my impression is that Hillary Clinton is up a bit.
She is up a bit, Charlie. Pennsylvania is really several different states, but two primary divides there are the West, those working class. There used to be steel mills, coal mills. There are now some shale outside of Pittsburgh. Used to be heavily Democratic. Donald Trump does very, very well there, probably even better than Mitt Romney did, who carried them. And then there's the East, particularly the four big Philadelphia suburbs, Bucks, Montgomery, Chester, and Delaware. Those four suburban counties, Charlie, will cast more votes than Pittsburgh and Philadelphia combined, and Trump is getting clobbered in those suburbs. Oh. So the places he's doing well are places that aren't growing much as far as voters or population. The places he's getting clobbered are just taking off. I think it'll take a miracle for Donald Trump to even be competitive in Pennsylvania right now.
But is this a larger picture of him? He is doing well with places that seem to be less optimistic about their future, and he's doing better with them and worse with those people who seemingly are more optimistic about their future.
No question that. The divide, certainly it's the suburbs and the exurbs. It's not just Pennsylvania, it's Virginia, it's Colorado that are going. They went for Obama, they're going more decisively for Hillary Clinton, in large part because they're anti-Trump, and also it's the college. There's an overlap here. College-educated, which Mitt Romney carried. He carried college-educated whites by 14 points, and right now she's winning them by about 10 points. That's a huge turnaround.